Welcome back to the Money Focus Podcast. I'm your host, Moses the Mentor. In this episode, I'm joined by Davis Mendez. He's the innovative force behind Sunbelt Homes, and his expertise in identifying high-quality real estate investment opportunities and at the same time leveraging cutting-edge technologies has made Sunbelt Homes a premier destination for investors. So I'm excited to walk through his journey and explore how Sunbelt Homes is shaping the future of real estate investing. So let's get started. All right, Davis, appreciate you joining the show. And what I always like to do when we start the show is to give my guests the floor to talk a little bit about their career journey and ultimately how they started their business. So the floor is yours.
Yeah, absolutely. I appreciate that. Yeah, I mean, my story, it goes back to, 6, 7 years ago, in college, kind of just getting my feet under me, looking for, really ways to make money. Through my entrepreneurial journey, I had a lot of experiences, starting, smaller businesses and just kind of hustles throughout high school and going into college to make money. And I got started in real estate going into my sophomore year of college, looking for a new avenue of, kind of just create my own schedule, work around classes and things like that. My mom actually suggested that I go and get my real estate license, right? So that was my first intro into real estate. Right around that time, I was like, okay, while I'm getting my license, I want to go work for a real estate company and kind of just make sure it's what I wanted to do. So I started working for, just a small local broker in Athens, Georgia, really just kind of doing his ISA work, doing cold calls for him, calling for sell-by owners, trying to set up listing appointments for him. And I actually scaled out a team around that lead generation model, right? So we ended up hiring 3 more people. I oversaw that team. He really liked it. And, during that time, I actually read the famous book, Rich Dad, Poor Dad, right? And the book that everybody had read. And I had known I wanted to get into the investment side of real estate already, but reading that and kind of hearing how there's a part in that book where he talked about finding a multifamily deal and not having any cash to buy the deal and actually finding an investor to pick up the deal and kind of basically wholesaling it, right? He basically talked about wholesaling that multifamily property. And I was like, man, I'm a broke college student. I was making like $1,200 a month working for this broker doing this. I was like, I want to do that. I want to figure out how I can find deals and help other investors invest into them, right? Talked to my broker about it a little bit, and he was like, man, I don't understand that. I'm just doing, my normal broker stuff. He's doing a little new construction too, selling new construction for a builder. He just wasn't a good resource. And I was like, okay, I guess I'm going to have to learn it on my own, right? And so I learned, kind of like, how to flip houses, how to find deals, how to find leads, and, people who may be in distress, and you could find a really good deal. And at the same time, I was still working for them. So around this, about the same, it was like a 2-week period, right, where I had found a piece of land through calling to actually tax delinquent properties, right, people who were not paying their property taxes. I found a guy who owed about $1,800 on property taxes on a piece of land that you could not build. You could not do anything with the land. And he agreed. He said, if you take care of those property taxes and you give me $500 on top of it, I will quit claim that property over to you and handle the property tax. You give me $500, I'll quit claim it to you. You take care of the property taxes. So I said, okay. The land wasn't usable. Had gas lines on the property. It wasn't zoned. It was community land. You couldn't build a house on it, but it was on a main road, right? A main traveled road, double yellow line. It had a lot of traffic. So I said, okay. I had about $1,500 to my name. I gave him the $500 to quit claim it over to me, and I spent $200 on a big banner that said "We buy houses," right? And this was like, I was like 19. I didn't know what I was going to do. I didn't know what would come of it. I was just like, I just want to get exposure. I want people to call me, right? Put my own cell phone number on there on the banner, put it out there, and I waited. So 2 days later, and this was like 4 or 5 months of trying to get a deal, right? Trying to find a deal, okay? So 4, 5, 6 months in, I get this piece of land. I put the banner up, and 2 days later, a guy calls me, tells me about these 2 houses that he has. One's completely vacant, ran down, empty. The other one has tenants in there. He's rented it out per bedroom. None of the tenants are paying anymore. He's completely lost control of the property. So I went in there, Didn't know what to offer them, didn't know what type of numbers I would be running, but I was like, look, man, I think, if I could get both houses at 40K a pop, I think I could do something with it, right? And so that's what I did. I put it under contract, and 2 days later, I ended up meeting a guy locally who was an investor. One of the brokers at that brokerage put me in touch with him. He had flipped houses prior, put me in touch with him, and he put me in touch with a buyer who came in. I assigned the properties to him. He made me an offer. We closed 7 days later. I ended up making about $25,000. I do not come from a silver spoon background. Like, that was the most money I had ever seen in my entire life. Like, I'm pretty sure that's what my mom was making a year, maybe a little bit more. So that was it completely changed everything. Around that same time, that broker had stiffed me on kind of a commission I was a little upset about. So I walked in, I said, listen, man, I'm just going to roll with this. I'm going to try to figure this out. I appreciate
Yeah.
everything you did. And, the rest was history, and it kind of just evolved and steamrolled from there.
Yeah, that's a great story. So, a lot of people with varying experience levels in real estate, they may not know the concept of wholesaling.
Mhm.
Can you give us a high level breakdown of what you just did and how you went from having really you putting a house under contract with no money
Mhm.
and then attracting a buyer and then collecting a money on the back end. So can you just explain how it works for the listeners?
Absolutely. And I didn't, to be fair, I didn't know it was called wholesaling. A lot of people who wholesale, they came up, kind of watching all these YouTube videos and stuff like that. I had no idea what I was doing. I just knew I had somebody who wanted to buy it, and I was going to lock up the deal, right? So wholesaling in a nutshell is you're locking up the property under contract, and you're able and willing to be the one to buy the property, right? You are contracted with the seller to be able to buy the property. And it's at that point when you have a contract, and this is with any contract, not just real estate. Contracts can be assignable where someone takes over the responsibility of that contract. And basically, what I did was find somebody who wanted to take over my responsibility via that contract to purchase this property. And for doing that, because it was such a good deal and because the person would make money, they gave me a fee for allowing them to take over my responsibility to buy it. Now, if I didn't find somebody, the next goal would be to find somebody, who would give me money to buy it. And that was like going to be my next step, if I couldn't find anybody to buy it from me. But in a nutshell, it's just, having somebody take over your obligations to purchase that piece of real estate you put under contract.
All right, that makes sense. I mean, a lot of people hear about wholesaling and how they can get in the game and
Yep.
make money without using their money. So that's an example. You use some of your money, but you made such a great finder's fee,
Hmm.
essentially at the end of that. So it's another way to get into real estate. That's what I love about real estate. Is so many avenues to make money, and you
So
kind of
many.
stumbled into that, which
Hmm.
is crazy. But it's a lot of people that truly specialize in that lane.
Yep.
So kudos to you. So you quit your job at the brokerage at this point,
Yep.
and you were like, "Hey, I'm ready to roll." Is that when you started Sunbelt Homes, or was it kind of like you worked your way up to that?
Yeah, so that was I didn't start Sunbelt until about 2 years later. So at that point, I was just like, okay, I got a nice little chunk of change in my pocket. What's next? How can I go from here? Another part of this story is I actually found out I was going to have my first daughter right around that time. Like, it all kind of just came full circle right at the end. So I was like, okay, this was in June of I think 20 going into 2019. My daughter was due in December. I was like, okay, from here, this 25,000, I either have to grow it into more or I have to be able to stretch it and maybe kind of create a career around it. But I was like, no, I want to continue to start this business. I want to grow this business. And it was at that point, I think at the time I was operating under an LLC. It was just Davis Real Estate, right? Was the LLC I was just doing deals under. And this was just in my local town of Athens, Georgia. I didn't go into Atlanta. I didn't go into any other places. I just stuck with Athens. And I said, okay, you know what? I'm going to continue that same model. I'm just going to get on the phone with people. And my goal was to flip houses. That's where I wanted to get into, right? So from there, my next couple of deals were some smaller, distressed mobile homes, a couple of vacant lots, just kind of figuring out where my niche was, where I could find, some really solid ground. And it's actually another funny story. So the next deal, this was like 3 or 4 deals after the fact. I put a condo under contract in a really, really bad neighborhood in Athens. This was a notorious neighborhood. They were, really bad gangs. There were a bunch of shootings, killings, drug dealing, really, really bad area. I got this condo under contract for, I think, $25,000. And I didn't know anybody who wanted to buy condos. So what I did was I researched, the condominium complex had about 200, 300 units. I looked up each unit to find who owned the majority of the condos in the complex, and it was this entity. They owned about 100 out of the 300 condos. So I said, that's my buyer. That's who I want to talk to. That's who's going to buy this deal. So I skip traced them, right? I reverse skip trace. I went on, I think White Pages was what I was using. Got their number, reached out to them, and asked them if they wanted to purchase this condo. A couple things ended up happening with I ended up talking with the owner, and he was like, Davis, you sound like a really sharp guy. You sound like you know what you're doing. I'm flying down to Atlanta. I want to meet you, and I want to see if you can help us buy more condos. And so he ended up flying down. I ended up meeting with him, and we ended up purchasing more condos in that condominium complex. And that's kind of what steamrolled me into a couple years later being able to create Sunbelt Homes due to that initial investor basically giving us an opportunity, because that relationship ended up turning into our hard money lender. And he started lending us money to buy some of these houses in Athens to do full renovations and to do full flips. And so it was like this 6 to 12 month span of me not knowing anything, me trying to get into the business and put that into the universe, and it just kind of steamrolled from there.
So, man, that's a great story. And I was going to, next ask you about the challenges that you had in starting Sunbelt Home. So it sounded like from a funding standpoint, you
hmm
did have access to money to help with your flips. Were there any other challenges that you had early on in starting the company?
Absolutely. I mean, there were a number of different learning, experiences throughout. I mean, just, the number of deals that we got under contract that weren't deals. I mean, they just I didn't understand my numbers correctly, and that really helped me, I think, later on be really really stern, like be really really strict with any property that I look at. Like, I don't want to give the sellers a hope or a number that I couldn't stand by on the back end, right? So the challenges were definitely for me, being able, I wasn't scared to talk to people. That was because I came from sales and I came from a couple of other businesses already that I'd done door knocking. I wasn't afraid to get on the phone and talk with people. But what I didn't want to do was put somebody who was already in a distressed situation in an even more distressed situation because I wasn't able to do anything with their property because I got my numbers wrong, right? So that was the biggest learning lesson for me, that you got to be right on your numbers. You really got to know what you're doing when it comes to running renovations, when it comes to, analyzing potential rental income, when it comes to analyzing potential market value, right? It played a big role. And that's where, I really, really had to buckle down and, kind of just make sure I was disciplined and that I was running my numbers correctly.
So, for, someone that's trying to start their own company in real estate,
hmm
like you, I mean, you mentioned about knowing your numbers, running your numbers,
hmm
renovation budgets. Like, what advice would you give to someone who's trying to learn these things?
I
Because
think
I mean,
that,
there's a million
of
books out
course.
there, but like, is there like some advice that you would directly recommend versus just reading books or
I
something
think
like that?
for me, I always approached it with a I want to learn more mentality. So whenever I got something under contract and whenever I put it in front of an investor, right, it was, what do you think about it? What is your response to this? And I kept it small in the beginning. I only wanted to work with, 5 or 10 people, not a huge 1,000, 2,000, 3,000 list, of investors. It was just like, hey, I know some local guys. I know they're paying top dollar for stuff as an investor, but what can I do better to bring you properties? And I think kind of just coming in with that open mindset of I don't know anything, but I'm hungry and I want to get out there and I want to do something. What's the ropes? Can you show me the ropes? If I'm providing value of being willing to get out on the phone and hustle and find deals, and you being the first one that I present it to, they're going to be like, okay, let me invest at least a 10-minute phone call on what I'm looking for, how it could benefit you, and how I kind of analyze deals. And that's what really kind of I think helped me in that sense, was just kind of being open-minded and saying, look, I really don't know anything, but my value is I'm going to be a bulldog and I'm going to get out there and hustle.
Because I mean, when you're an investor and you have the money, you know, someone like yourself that's going to really get in there and get their hands dirty and do the grunt work, that's
Hmm.
you're of value to an investor at that point because then they don't have to do that, right? So if you come to the
Absolutely.
table and like you mentioned, being the first person that they call, they're going to appreciate that. So they'll pick up the phone and they'll work with you over and over. So it just makes a lot of sense. So
Exactly. Yep.
so, so again, like with Sunbelt Homes, can you just describe the investment strategy that you guys have
Yep. So,
for the
so
audience?
I
Yeah.
was never put on to single family as an asset class until a couple years later. So it was actually with that fund that owned the condominium complex. So I started working with them. I built a great relationship with the CEO, and I guess he saw some in me. He was like, look, I'll fund your first flips. Let's get started on this end. So it was, 6, 7 months. We did 2 or 3 flips, right? They went really, really well. We also bought some condos in that complex. I think we ended up purchasing 14, 15 condos. Of course, at the time, Davis Real Estate was making fees off of those. We were doing the flips. That kind of really started to steamroll and pick up and do really, really well. Around that same time, that family office had created an opportunity fund to start buying single family in Detroit, right? So we
Oh,
went
okay.
up and we went to the Detroit tax auction. We drove all the neighborhoods in Detroit. We learned about everything in Detroit. We learned about where the bad areas are, where the good areas are,
Mhm.
what the formulas are of buying attractive deals in Detroit, and what properties are coming up to auction. And I think the first run they had purchased around 500 single family homes in Detroit. And it was at that point I was like, wow, okay, and I had known some guys through doing a couple of other wholesale deals and just in Athens who had, 200, 300 homes, but I was like, okay, wow, like these dudes are really serious about single family, and this is an actual business that, you can take really, really large. And I've always, if anything I did, I wanted to go as far as you can go. I didn't want to be, just confined to one small little area. And so I was like, okay, that really expanded my horizon. And so when we did that, and I didn't want to do multifamily like everybody else was doing. I didn't want to do commercial. I just wanted to find an asset class that was unique. And that's where single family as an asset class really just exploded. And I said, okay, if they're willing to buy 500 homes in Detroit, which Detroit is like the wild, wild west when it comes to single family, like it is, if you're not a pro, like don't play there. You will
Don't
get
play.
burned quick, right?
It's
You,
probably similar. I'm in Cleveland,
you said
so
Cleveland. Yeah.
yeah, I invest in Cleveland, and it's very true. Like, people are attracted to Cleveland and your Detroits and stuff because they see the price point, but you have to be careful. You have to know where to invest
Yeah.
because the prices are so attractive, but you don't know what comes with that. So I love the fact that you guys went there and drove through the streets and assessed the neighborhoods. That was super smart.
Well,
That
and
that's
these guys,
exactly what we do.
I mean, they're managing $40 million. You're
Yeah,
not gonna
yeah.
just take it lightly. Like so, we went up there and we did the due diligence, and their thesis was spot on. I mean, Detroit even today has definitely grown, and but it's still not where it needs to be as a city. And you can still, again, there's still places where if someone tried to give us a house, we wouldn't take it. And so, but kind of going off of that, so that bulk buying and that really scaling up a large single family portfolio kind of opened my eyes, and I said, okay, if someone wants to do that much volume in Detroit, imagine what groups are out there that want to do this in Atlanta, Charlotte, Birmingham, Tampa, all of these other major MSAs in the Southeast. And that's what basically allowed me to stumble upon some of the larger institutional SFR owners, your Invitations, your Tricons, your Amherst, and things like that. And so I decided at that point, this was a couple years in, that I wanted to pivot from doing single family on a small scale just in my small areas And I wanted to start working with some of these larger groups and sourcing SFR throughout the Southeast for them. And so that's where it all kind of started with Sunbelt was building a platform to be able to do that for them. And it just kind of starts to snowball, and it turns into one thing after another, and you start to make relationships, and that's just kind of how it went.
That's great. That's great. So, how do you see the vision for your company evolving over time?
I think for us, our main thing is, we've perfected deal flow, right? We're trying to perfect deal flow. We have not perfected it, and it's really hard to. But perfecting deal flow, we are constantly having discounted single family coming in as an opportunity to buy, and the future for Sunbelt I see is being one, a home buying brand in the Southeast that people recognize. You're in Grayson, Georgia. You know the Mark Spains. You know like the Open Doors, the Offer Pads, some of these larger home buying brands. We want to be a part of that. We want to be a brand that people recognize specifically in this great region of the South, which I love. Growing up in the South, I don't care about anything up north. I don't care about anything out west, or Midwest. I love the South. It's just my home. It's where I want to continue to help the community and see the community grow, right? And so I'd like to be that home buying brand in the Southeast, and what I'd like to do on the back end, and what we're in our actually in mid stages of, is bringing on a joint venture institutional client partner who will come in as a strategic capital provider to help us start buying some of these discounted single family properties that are coming through our deal flow machine, essentially. When we flip, we're continuing to flip houses. I have a handful of rentals myself, but I'm not looking to scale up my own personal portfolio. What we'd like to do is be an asset manager for a larger client and deploy it into single family in the cities that we operate in.
I, I see a lot of single family homes now, like new construction,
Yep.
that are being marketed for rentals.
Yep.
So
Built for rent.
is
Yep.
that the space that you're actually some of your institutional buyers, is that something that they're looking to do as well?
Our institutional clients, absolutely. That's the big buzzword right now is built to rent, and it's been like that for a little bit. The biggest thing is it's hard to get it to pencil. As of now, John Burns. I don't know if you're familiar with who John Burns is, but he has a great data and research platform that basically analyzes everything SFR. He came out with a report not too long ago that built to rent rents are starting to flatline. Basically, they're not growing. That's pretty concerning because a lot of people are, it's kind of like a fad. I see it kind of like a fad almost. Like I like the concept and the idea, and I think it could gain legs over time. But I think too many people are trying to jump into it all at once, and that's when you create overconsumption, I think. So I do think it's a really good asset class, and I know some small town guys who are building 20, 30, 40 houses just to keep in their personal portfolio. I think on that scale, yes, absolutely. I think on the larger scale, I think people just need to be careful. And builders, with interest rates being so high, they're looking for a place to sell their homes, and I think they're going the easy route and going that way.
Gotcha.
I like the
So
existing homes.
the existing homes,
Yeah.
gotcha. So it kind of leads to my next question, like how do you identify, these single family homes and portfolios for investment? You talked a little bit about like how you market with signs and everything, but are there any
Mhm.
other ways you find these homes?
Yeah, so I mean, most of the ways is through the traditional ways that I think everybody leverages. We have a four-headed monster of cold calling, SMS, direct mail, and PPC, right? And so that's how we get people coming to us wanting to sell their property. And then on the back end, the biggest thing in terms of relationships is conferences, like going to the right conferences where all of the big boys hang out. There's a couple of conferences each year where pretty much all the players in the space go. Anybody who's buying single family and buying it on a larger scale go to these conferences. And so we've been, fully entrenched with meeting them, shaking hands with everybody, telling them, hey, look, we have good product and we know how to market the product. We know how to underwrite it and get stuff that's just not going to waste your time. And that's, I'd say, on both ends, that's basically how we do it. And it's not easy. Like, it's a simple concept, but it's just not easy. And you have a lot of people, really murking up the waters still. That makes it really, really difficult for somebody, who's trying to do good business. They just can't because the industry has gotten a bad reputation. You know what I mean?
Is it easier now because rates are higher, or because sometimes I run into investors who actually prefer when rates are higher because it kind of gets like the everybody jumps in when rates are super low. So I want to hear from you about that. What's your opinion on the landscape of investing now and working deals when the interest rate market is higher than what it has been in the past few years?
I think that, it's definitely doing a good job of what it's supposed to, which is removing the fat from the industry. I think that only the strong survive, as they say, right? And so I think that it's doing a good job at removing the people who aren't actually maybe good at what they do, or good at it. And, the easy money allows for that a lot. And this is on small to large scale. I mean, you look at some of these multifamily syndicators who syndicated multifamily deals over the last 2 years, like especially in Texas, like they're in huge trouble. I mean, multi-million dollar properties are about to go under on the multifamily side because they just got too sucked into free money. So I think that it's removing some of these bad players. And so that's what I like about it. From a deal perspective, there's still a pretty big disconnect from seller's expectation versus what you can afford to pay,
For
right?
sure. Yeah.
So that's been
Yeah.
the biggest challenge on the high rates.
Got you. So I'm gonna throw out, AI because that's a buzz right now, and I do think it's a real thing. I think it's going to really be great for,
Of course.
um, yeah, for humans across the board. But in your opinion, I mean, how do you feel like technology will impact your investment process? Have you incorporated any AI in your operation? If so, talk a little bit about that.
So, from an AI perspective, the big thing for us is workflows and what CRM we use. That's been a big help. But on the AI side, one thing that we've really taken a liking to, and that me and another guy who he actually works with Marketplace Homes, who is a very large property management company out of Dearborn, Michigan. He's brought me on as a co-founder, and we have created a conversational AI bot. So it actually gets on the phone, it talks to sellers, communicates with them verbally, not chat, actually
Mm,
talks with them. And we're looking to apply that to property management companies. So, property management companies that take on leasing inquiries, maintenance requests, different things that you may expect on the property management side where you don't actually want to have a full-time staff member there to answer the phone. This AI agent can do it and can do it intelligently, concise, and can set up things on the back end like creating tickets, calendar appointments, sending emails, sending text messages. So that's probably the biggest way that we've incorporated it and that I've actually been a part of, and really, really excited to kind of see it roll out. And shameless plug here, it's called talktimeai.com.
uh,
Feel free to go check it out. It's a really cool application that anybody can use in their business, not just real estate. I mean, it can make conversations around ice cream if you wanted it to, football. It can talk about anything and it can do anything that you want it to. So I think it's really, really exciting.
Yeah, I'm gonna definitely have to check that out because, I mean, I'm a person, I have a sales background early in my career too, but I don't like being on the phone. So I'll say
Right.
that. So, I did it out of necessity. So if your AI bot actually can have a really natural conversation, I think that's pretty cool. I like
You
that.
can.
I
I'll
like that
definitely send the
concept a
link
lot.
to you, by the way, after this. It's very, very cool.
Sure. And yeah, we'll put it in the show notes too. So I want everybody to check it out.
Absolutely. Please
Um,
do.
well, how do you actually help? How does your business help streamline the investment process for your clients?
So on both ends. So we'll start with the seller because I think that's the most important part. Due to our relationships on the back end with companies that are more yield focused rather than spread, profit margin focused, it allows us to be able to offer a better solution to the sellers on the back end. No property no property that needs a lot of work should be sold on the MLS to a retail buyer, in my opinion. Because if they're going and looking at a discounted home because of their budget, they're just going to end up becoming house poor because now they've bought this home that needs a lot of repairs and it's probably going to fall into even more distress. Like that is never the solution in my mind. I don't think agents do a good job at selling distressed properties. And it just, it's a necessity to have these type of solutions off market, right? And so I think of the value that we bring on the front end is a better outcome for them rather than selling it at 50 cents on the dollar to certain fix and flippers and maybe other wholesalers, right? So we're able to offer a more competitive number, a better solution. We've seen a lot, so we can help people in all aspects of the situation. I mean, tenants, major repairs. I mean, there's a lot of more complex issues like with title, with probate, inherited properties that come up that we've just seen it. I mean, we've done over 200 homes in this fashion. I mean, we've seen a lot of different scenarios. We have a lot of solutions that will help them depending on the situation. So that's on the front end, I think. And, it's a streamlined fashion. I mean, it's a 30-day transaction. It's really not a lot of heavy lifting for the seller. So makes it really easy on that side of things. Now, on the buying side, kind of like what I said in the beginning, it's a really big problem right now, and not a lot of people want to work with the wholesale industry specifically, or anybody who classifies himself as a wholesaler. I wholesale, but I don't classify myself as a wholesaler, because we do all types of stuff, but specifically wholesalers are notorious for putting properties either under contract on the MLS or putting properties under contract that just at a price that just should not be put under contract, right? And what that does is they're going to have to go back either one and cancel or renegotiate the contract at the very last minute, which makes the seller really, really upset, right? Makes them not
Yeah.
want to do business on
Well,
the off market side. And two, it on the buying side, nobody takes they don't take wholesalers serious because they get all these deals and they're just so far from being able to pencil, and it's like, oh, whenever we get a deal from a wholesaler we don't even look at it because we assume that they assume that it's not a bad deal. And so what we express and what we try to sell and when we go and meet with these people at the conferences and what we try to pitch and say is that, like, look, we're not here to make $50,000 on every single wholesale deal we make. We make a realistic fee where we still get paid, you guys still have meat on the bones, and you guys are able to take a great property, turn it or take a property that can be great, turn it into a great property, and provide rental housing for the community on the back end. And ideally, do it at a more affordable price than if you just bought it on the MLS and then tried to re-rent it. You know what I mean?
that makes sense. That makes sense. So your approach is, hey, we'll take less per property because we're going to get a larger amount of purchases because you're dealing with these larger investors. So
Exactly.
for the people that are selling the home, they can take your offers a whole lot more seriously because it's more competitive,
Exactly. I'm
right?
not trying to make
That's yeah.
50,000 on a deal. I might accidentally make 50,000 because I just happen to get a good deal or the seller's just like, "Hey, give me 200 and I'm happy." Sure. But most of the time we're averaging anywhere between 6, 8, 9% on the purchase price. And in my mind, that's very fair. That's equity that's going into the person who bought the home. That's equity going into the person who's going to buy the home and renovate the home and have sweat equity in the end, right? Wholesalers do a lot, and I do a lot on the off market side, and we definitely should be paid, but we, you know, 80,000, 90,000, 150,000. I mean, that's a huge fee. And I just think it makes the world go around a little bit smoother when you're kind of sharing that with both other parties who frankly are providing a little bit more value.
Yeah. And yeah, because if you're getting that much from a deal, somebody got. You know
Somebody
what I'm saying?
got.
Like somebody lost. So yeah, no, I like I've never heard that concept. I'm gonna be honest with you. I mean,
Nobody does that.
typically, yeah, I mean, wholesalers are like, hey, I want to get it, and I got these people lined up. They want to get this check, that check. But your approach is more conducive to what the way I would look at it because it's more about a long-term relationship. It's more about sleeping good at night, knowing that you helped someone, who was in need to sell a property, but also that person who had the funds to purchase the property, they're going into it with more equity and they'll say, hey, Davis, hey, Moses, yeah, I would love to work with you again and again and again and again. So I really like that. So
Thank you. And I
appreciate you
think I
breaking that
think
down.
I think it's just opened doors for me too at the end. It's allowed me to network with people with, extremely high net worths, with real estate funds with $1 billion under management, who people who have companies that are listed on the NYSE, I mean, like I've, been able to meet these people, and it's because they introduced me as, look, this guy has great deals, and he's not greedy. Like, he just wants to help everybody make money around him, including the people who are selling the property. So I think it's just a really good approach, and I've always been like that, and I probably will always continue to be like that.
Cool. Cool. Hey, it's been working for you. It's been lucrative. So keep it up. Keep it up. So, what common misconceptions about real estate do you often hear from people?
I'd say the biggest one is that, for one, corporate buyers are hurting the real estate market. I wholeheartedly do not believe that. And everybody has their own opinion. But we'll start with that. I'd say for that side of it, like the big institutional buyers, I think it helps the market. If you've seen what I've seen, if you've seen the houses that I've inspected from landlords where the kids are sleeping on plywood floors because the carpet hasn't been replaced. There's cockroaches and there's food everywhere, and the house is in horrible condition. The landlord hasn't fixed it. He hasn't repaired the roof. He hasn't replaced the AC units, and you got kids in there. Um, I've seen a lot of stuff, and that's not going to fly with a corporate landlord. They have a higher standard of operation. They're going to rent it professionally. Like, that's just not going to happen. On top of that, they've been buying for years, since 2012, these companies. And it was only up until COVID and interest rates going down when the retail buyers flooded the market and started competing. Then they didn't want to point at themselves that they were competing with each other. Who are they going to point to? Corporations, right? Because it's the easiest thing. Everybody can get around and they can blame the corporations, but really it's just the retail buyers. And I experienced that as a broker, as an agent, as a buyer, as an investor. It was just retail buyers all flooding in because they were getting 2.5, 3% interest rates. You know, that's really what drove up the prices. And I saw that firsthand. I saw corporate buyers would back out of a deal because there was too much competition with the retail just driving up the prices. Like, they're number based. Like, they want to buy it at a certain percentage. If it doesn't hit their metric, they're gonna not buy it. The retail buyers don't care. They're just like, I want it, I want it, I want it, and that's what drove up the prices. What I saw. Um, I would say another thing is that whoever you want to work with, and, like, like whoever you want to find, like, get information from online, right? You just have to make sure that they are authentic and that they're in real estate and going to be in real estate in the future. That they're not just somebody who learned about real estate during, let's say, COVID, right? When everybody was online and everybody was learning, hearing about real estate, and they kind of just jumped onto the fad train. Like, that's just, I feel like that's a misconception where a lot of people online are talking about real estate in a way that the concept is very easy. It's very easy to grasp. Like, it's not a complex thing, but the work that you have to put in on the back end, it just has to be understood that there's a lot of work that goes in on the back end, a lot of learning, a lot of trial and error. And I think the misconception is that anybody can get up there and preach and talk about doing real estate, but don't take it with a grain of salt. Only believe half of what you see. And so I'd say that's a pretty big misconception I see right now in the industry. And I think you're doing a great job. I think you're very personal in what you do. And I looked at your stuff, and I think that you don't have anything. It doesn't seem like you have anything that you're trying to gain out of this. You're just genuinely wanting to share the knowledge and share the knowledge wealth with others. I can just see a lot of other people where there's truly something they're trying to gain from this, and I don't think it's good for the industry.
Very
I
true.
really don't.
Very true. Very true. I appreciate that. That's my goal. My goal is to, be authentic, be real with people, show them the pros and the cons of investing in real estate. And also part of the reason why I started the podcast, because I don't claim to know everything. So the
Hmm.
podcast is a great opportunity to spotlight people like yourself that are, investing in one lane where I don't have the expertise. So that's the reason why you have two ears and one mouth. You know what I'm saying? So I'm all ears for my guests, just like I hope my audience is. So I really appreciate that. So when I'm talking from experience. I'm talking from, being in the trenches. And a lot of times, even if you're hearing and getting the education about a topic, until you actually start doing it,
Hmm.
that's your best teacher, like actually, like
Absolutely.
applying what you learn,
Absolutely.
because
Just
you'll
get
be
out there.
surprised.
Just get out
Yeah, you'll
there,
be
you know?
surprised.
Yeah.
Very true.
And I'll add one more thing too, like, especially for any of your listeners, I imagine a lot of them are new and just new into business or,
Yep.
maybe in business but wanting to grow. And I would say, like, anybody who's on social media, especially who's advertising their stats, their numbers, like, I'm doing this, like, you should be here. Like, please, like, don't let
Yeah.
that get to you or get you down or like you have no clue how much debt that man has probably on the back end. You have no
Indeed.
clue what that person is going through, And I mean, again, it's believe nothing that you hear and only half of what you see, like always, and especially with social media, So
Biggest thing,
don't let it kill your confidence, is
yeah.
what I'm saying.
The biggest thing is when people speak about numbers and they talk about gross.
Hmm.
That drives me nuts. You know what I'm
Hmm.
saying? Like you want to know your net cash flow. So
Yeah.
yeah, you're collecting all this rent, but
Hmm.
how much do you actually get once you all your expenses are paid? Let's talk about that, because once you start digging into that, again, it's not about the number of units, it's really about the quality of your units. Like
Absolutely.
there's so many properties that I have the opportunity to buy that I don't, because I just know the numbers don't make sense for me.
Hmm.
I live in Atlanta. Like I said, I love the South too. I'm originally from Brooklyn, New York, but this is my home. I live in the South.
Hmm.
But from a rental property standpoint, for the size of my company, JRED Properties, like I'm not this institutional buyer. I don't have hundreds of homes.
Right.
It's best that I go into a market that's a cash flow market, because my objective is to replace my W-2 income, my wife and I. So we do it in a different way, and our goals can be met
Hmm.
in Cleveland, Ohio. So
There
you
you
have
go.
to be very agile, you have to know your strategy,
Hmm.
but your numbers have to make sense. I'm a
Absolutely.
finance guy, so it's very, very important.
And it is, and it
So,
is, and I'm telling you, you never know what these people have going on. When you're looking at so man, people lie. I
yeah,
mean, people would just bold
a
face lie
lot.
to you on social media. What do they have to
Yeah,
lose? I mean, so
they can get
so
away with it, unfortunately.
they can. So I just say that. I just think that's a
Yeah,
misconception right there. Is just because they're on the internet does not make them Mr. Know It All. You know.
true.
So
Cool, cool. So let's talk a little bit about the future of real estate investing. So, what innovations do you foresee in the real estate investment sector right now?
I think there's gonna be newer ways for people to invest into real estate similar as they do into stocks. I think that's going to be a pretty big one. I went to a conference in December. This guy had a really interesting platform. It was very expensive, but what he would offer is being able to basically securitize your asset for you. He'll form the LLC the way it needs to be formed. He'll get with a securities attorney. He will create shares for that LLC that owns that piece of real estate and basically build a platform for you to invest into shares of that LLC that owns that holding. I thought that was pretty cool, and I do see it kind of going in that direction. I think just for any and everybody to get access to that appreciation and cash flow. I think overall, I don't know what these next couple of years hold for us, but I think if you're always looking to buy at a discount, I don't think these next 2 years, should really scare you from buying. I think if you're still looking for a deal and you run your numbers right, it'll cash flow after debt. I think you're in a you just got to continue doing what you're doing because if we see real estate values fall 30, 40, 50%, everybody's going to be toast, So it's like, what do you got to lose? I mean, the big boys are going to be losing on everything. So, what do you have to lose?
Yeah, you had mentioned Invitation Homes earlier, and correct me if I'm wrong, but I believe I heard that they were like the number one owner of single family homes in
Yeah,
the
they own about
country. Is that true?
83,000 right now.
Wow. So at some point, I ended up selling those shares, but I did invest in purchasing some shares of Invitation Homes. So
Yeah.
for people who don't want to, actually buy physical real estate, so you can identify companies like Invitation Homes, American Homes for Rent.
Yep.
You can purchase a REIT, which is a
Yep.
real estate investment trust, where you can say, oh, yeah, I own single family homes. They do all the work, and you buy shares of that company
Hmm.
and you would actually receive the dividend income, which would be kind of like your cash flow if you were really like actively investing and owning physical property of a single family home. So again, it's a lot of ways that you can get exposure to real estate. You don't
Hmm.
have to be like all in like I am, or having to deal with tenants. You can really
Hmm.
be very passive with investing in REITs. So I just wanted to point that out.
I think that's great, and it's not just single family. I mean, I think they're probably in
Yeah,
like 300, 400 REITs, and they're all in, different areas of real estate. Some own just logistics centers, some own just data centers, some own medical offices or office
yeah,
complex, and so, there's one on the stock market, Vici Properties. They own the Strip of Las Vegas. I think it's a phenomenal company. I think they're going to see continued growth for the next 20 years. And all of their real estate is everything that's on the strip of Las Vegas. And so you can get exposure to locations and different property types just through doing that. I think it's what you got to decide. Everybody wants to be a real estate investor, but do they want to be an active investor? Because that's where the hard work comes in. And you know as well as I do, especially in Cleveland,
yeah.
when you're active investing in Cleveland or Detroit or these cheaper markets, they're cheap for a reason.
Yeah.
It's a challenge.
Older homes.
Older
Yeah,
homes, yeah,
it's
older workforce homes.
yes. Yeah. So it's when you mentioned Detroit, like I said, I'm in Cleveland. I'm in the suburbs of Cleveland. So,
Mm,
that's why you have to really be careful about the certain areas that you go into. But even if you're
very.
in the suburbs of Cleveland, you're going to deal with older homes. I'm talking about homes that could be 100 years old.
Yeah,
So
1900s, yeah.
hands down, yeah, hands down, you're going to have some issues with the home that you're going to have to tend to at some point. So going into them, the price points are lower, but expect to put some money into them either initially or have higher reserve percentages set to the side so that when those things happen, you're ready.
Hmm.
That's the difference.
Absolutely right. But the returns on the back end are nice. I think that fund, the, the
Very
the
nice.
Detroit fund was returning 16%, which is you don't find that. Um,
Right.
you
Right.
don't find
Right.
that just anywhere.
Very true. So what advice would you give to someone who was looking to actually start investing in real estate today?
I would say, again, decide if you want to be active or passive. Like that's the most important thing. If you want to be active, you're going to have to do a lot of it yourself. You're going to have to find the deals yourself. You're going to have to find the contractors to renovate it yourself. You're going to have to, understand your financing and your debt and, where you're in, if you want to leverage it, where's that leverage going to come from? You got to kind of figure all of that out if you're wanting to buy. If you're wanting to just get started in real estate from a younger person's perspective, maybe they don't have any money and they're wanting to get out and just kind of figure things out, I would say just work for somebody for a year. Like that's the worst thing you can do is you work for a year and you got paid and you didn't learn anything, right? But I guarantee you will learn something, and in the background work on figuring out how to find deals for whatever type of property you want. If it's commercial, if it's single family, if it's mobile homes, mobile home parks, it could land, it could be anything. But find that one thing and stick to that. Like, don't be Mr. Oh, I do a little bit of commercial, I do a little bit of multifamily, I do a little bit of land. Like, don't be that guy. Really laser focus on one type of property and just say, I want to go after finding good deals and figure out how to find good deals. Good deals always find money. Like, if you have a good deal, you will find somebody who either want to buy it from you and pay you a nice little fee or invest with you and maybe say, hey, look, if you can come up with 10%, I'll pay the rest and we'll split it, 60-40, right? That was kind of the agreement that I had with that group with the fix and flip. I found the deals, I marketed, they invested, I got 40%, they got 60%. And it was my first deal. Like some people may hear that and be like, "Oh, you're not getting the most out of the deal." Like they're risking 250,000. I'm just, a 21-year-old who found a distressed piece of real estate. Like, yeah, I'm gonna take the 40%, you know?
Absolutely.
And that's again, that mindset has steamrolled me into bigger and better deals in the future. Like, don't be greedy in the beginning. Just be open-minded, and I think that's how I would do it again, if it were me.
Perfect. Yeah, I appreciate you breaking it down, giving us a lot of great information. So let's close it out with you, giving the audience your final thoughts, and also make sure to drop different ways that we can contact you. So like your website, social media, and I'll also again put that in the show notes. So the floor is yours.
Absolutely. Again, I think if you're listening to these podcasts, and you're taking all of this stuff in, you're already on the right track. It's about just getting out and taking action, just having conversations with people, whether it's professionals who have been where you're looking to go, or if it's people who have real estate that you're looking to acquire. Get out there and have conversations. It's not scary. It doesn't matter. It doesn't matter if you fumble over your words. Just start talking to people, and the conversations will get better and better. And yeah, just don't be afraid. Don't be afraid to ask questions if you don't know something, because people in the real estate industry are really excited to help people learn. And so, and it's just like a give back thing. So I think those are the two most important things. And if anybody has any questions for me and wants to get reach out to me, my emails are always available. It's Davis, Davis at sunbelthomes.us. Shoot me an email anytime. I promise. If it's just one question, I will respond to the question, as soon as I see it. If you have a couple of questions, I'm an open book, man. Like I'm happy to help people learn and get a taste of this awesome industry.
Great, great. And I want to say thank you again for accepting my invitation to be on the show. I love real estate investing, so this was great to speak to a fellow investor and learn a different lane of the industry. So I hope everyone enjoyed the show. And again, thank you, Davis, and we're out.
Awesome. Thank you.
Davis, thank you again for joining the show and sharing your valuable insights, telling us about your company. You have a great system going on, so good luck to you. And also, just our discussion about real estate investing as a whole, I feel like the audience is just really going to soak it up. At least I hope they do. So, good luck to you and everything that you got going on. I feel like the sky's the limit for you and your business. To my listeners, before you go, please make sure to check out mosesthementor.com and also go to my YouTube page, Moses the Mentor, for more inspiring conversations like this and also for the latest rental property investing videos from myself. So check me out. Until next time, keep your financial goals front of mind and make sure to keep new opportunities within reach. So have a great day. Peace.